Hello traders, welcome back to Bunnex Investment Group. In this video, we are going to talk about a very powerful exponential moving average trading strategy. So we are going to be more on the side of practical rather than explanations, meaning we are going to do learning by doing. So all the time we'll be on the charts and make all the explanations as clear and simpler to understand as possible. On that note, let's actually jump into the content. The first thing, as always, whatever trading asset you have been issued, might be US oil, it might be gold, it might be an index, you always need to start on the higher time frame. So on my charts, I have several EMAs, and for the purposes of those who are new to this channel, the first one in yellow is the 5, then red, 50, 200, and 800 EMA. And all these EMAs are very important. They actually interlink within the time frames. A 5 EMA on the daily time frame is actually a 13 EMA on the H4 time frame. A 13 EMA on the H4 time frame actually behaves as a 50 EMA on the H1 time frame. So you are going to need all of these EMAs on your charts, and they are default and free for anyone who has any trading platform. All right. So the first thing, as I've said, is to start on the higher time frame. I love to have a look on the higher time frame and then go down to the weekly time frame. On the weekly time frame, we can see the market has been going to the upside for quite a long period of time. And in that particular case, there are significant points that we can see within our flow. We can see that the market actually made a pullback here. It made another pullback at this particular point. So in this particular case, we can see where the market is actually making these pullbacks towards and the reaction of the markets towards those particular points. We can see the market actually. So there are reactions of the market at these particular EMAs, and we can actually use that to our advantage. But this is the weekly time frame, and we are not interested in making entries on such a high time frame. We need to go on tradable time frames, the H1 down to the M15 time frame, for us to make an entry. So I am going to use this point as my starting or my datum for my analysis. In this particular case, I'm now going to shift down to the daily time frame. As we shift down to the daily time frame, we can see the reaction is now on the 200 EMA. Whenever we have such reaction on the 200 EMA, we call it a datum, or we call it a reset point, cycle restart point. From there, we can now see, or we can now count our impulses to the upside using the same EMAs that we have highlighted earlier. So this is going to be my first impulse to the upside. And as you can see from that, we have this reaction as well on the 50 EMA. Then we had another impulse to the upside like that. So why are we talking about all this stuff? I want to show you the significance of the impulses. When we go down to the H1 time frame, we'll know what to look for. So this is how we have been issuing the impulses. We can see the reaction of the market on these particular points, which are basically on the EMAs, the 50 EMA in particular. So with that in mind, we are now going to start to see where we were going to make our entries using the EMA strategy. To define that particular EMA strategy, we now start again on a different set of rules. But before we do so, we have a program for traders who are serious, who wants to change their trading. It's called the 7-figure trader program, whereby we are going to train you and you become actually a good trader for high investments. So you simply go to the website that I'll leave the link in the description box below. Go to our services. We have signals, and then you go here, becoming a 7-figure traders program. What will you get when you are within this program? You're going to first go through a trading masterclass course. Then we'll give you 3 weekly live sessions on Zoom. Then a trading floor with like-minded traders, then trades of the week, month, or year, issued by our team of professionals, then monthly question and answer live sessions. So we'll then teach you how to double, of course, your own personal account in 3 days. So you just go there, register, and then we have a courtesy of a free ebook when you get to the page. So here, step 1, you need to download this free ebook, and then step 2, we are now going through this particular explanation of what you are going to achieve within that particular trading program. So it's only going for $115 per month. Make sure you set yourself among the greatest. Let's now continue. So what are we saying when we come to the smaller time frames? On the smaller time frames, the first thing that we want to do is to attain what we call a reset point or a cycle starting point. On the cycle starting point, what do we need to see? We need to see a multi-session M or a multi-session W. Whenever a multi-session M or W has been issued, like in this particular case, we had the very first leg, second leg, we need to see this particular peak locking. Peak lock will require 2 EMAs, which are the 50 and the 13 EMA, the one in red. If these crosses over, we actually say the peak is locked. After that, our entry will be at the first reaction of the market with the 50 EMA. In this particular case, we can see the market reacting initially with the 50 EMA at this particular point. Where can we make our entry? We can make our entry on the H1 time frame, whereby the candle should close above 13 EMA, the one in red, and then the above the 50 EMA. We can see the market went to the downside, but our entry is when a candle closes above 13 EMA, the one in red, and also above 50 EMA. That is where we make our entry, and our stop loss should always be below structure. Whenever we get something like this, we hold that particular trade for 2 levels, meaning in this particular case, we are going to exit at this particular point. This is where our normal levels we're going to end, whereby we have level 1, level 2, and then level 3. At this particular point, that is where we're going to terminate our entry. Whatever that came afterwards was now against our rules. The next thing is for us to see another peak reset or cycle continuation starting point, or a peak formation high. Whenever we get 3 levels to the upside, we expect to get what we call a peak formation high. From this particular point, we anticipated to see a reset at the 200 EMA, but unfortunately it was not issued. So the cycle restarted again at the 50 EMA, where we had this multi-session W pattern, level 1, level 2, and level 3. We reach the peak formation high. At the peak formation high, we can see the market actually creating a multi-session M pattern and a move to the downside. Our entry was supposed to be at the first interaction with the 50 EMA, right? But unfortunately, the market went above the 50 EMA and created something else, right? In this particular case, we could have entered a trade that was going to the upside, which was actually above the 50 EMA and above the 13 EMA to the upside, which actually lasted 65 pips. This could have went in for 2 hours because our stop loss was supposed to be below the market structure. It was actually a nice trade. Later to discover that this whole structure was a peak formation high. From that peak formation high, we can actually see a crossover of the 1350 EMA cross, and then a beautiful reaction of price on the 50 EMA, and the market went for level 2 and level 3 before terminating for a peak formation low. So in this particular case, what are we saying about our strategy? We are saying the first step is always to know where the cycle is going. Then after that, you need to know and understand the peak formations, whether it's a peak formation reset or a peak formation high or a peak formation low. all that stuff is explained step by step and in detail in the Becoming a 7-Figure Trader Masterclass. On that note, we've come to the end of our today's video. I'll see you in the next one.